Hello and welcome to episode 4. This is the portfolio update for July 2025, and this is my wealth odyssey where I'm trying to go from being a small investor and growing my portfolio so I can achieve my dreams of financial freedom in the future through building a long-term investment portfolio. As always, none of this is financial advice. This is just my journey and this is just what I'm doing. So as you can see on screen, I'm looking to add £500 per calendar month and I'm aiming for a 15% annual return in my stock portfolio. At the end of June 2025, we had a closing balance of £6,671.39. At the beginning of July, I added another £1,000 to the account. So that now brings up my total invested to £7,000. So it's nice to have 3 consecutive months of saving £1,000 into my portfolio. One thing that I noted in my June 2025 video was that I had only invested £500 in that month. What I really need to do is to add consistently to my stock positions throughout the month and to increase that to at least £1,000. So that was my aim in July, was to invest £250 4 times so that I hit that £1,000 mark. So now on screen you can see my portfolio and that I actually did add £1,000 to my stock picks. So I'm very happy with that consistency, and I'm just wondering if I can actually automate that each month to make things a little bit easier. But as you can see on screen, I added £250 to D-Wave, bringing my total holdings to £750. A further £500 split twice across that month, so 2 lots of £250, bringing my total holdings up to £1,000, and also another £250 into Rigetti Computing, bringing that also to £1,000. It's really nice to see 4 figures invested into 2 of my quantum stocks, and I will definitely be adding more to my D-Wave position to get that into the 4 figures also. Finally, on my portfolio list, I still have my investments into United Health and also my most recent purchase of Hims and Hers Health as well. So that means that I've actually invested £3,500 into the portfolio, and it's quite a nice balance because I also have £3,500 worth of cash sitting in my Trading 212 account, and that is receiving 4.35% interest. So now let's actually delve in a little bit deeper into my actual stock positions. What you see now on screen is the Hims price chart over the past 18 months or so. So for transparency purposes, you can see here that I invested my £250 at that solid green line at $45.84. Now, as you can see in the days and weeks that have followed, we've had a really nice appreciation in that account. So it's nice to see that the actual partnership that broke down hasn't really affected the actual growth of Hims in the short term at least. But again, we'll have to wait and see how things play out. Now, for full transparency, I thought from this month I will start showing my Trading 212 stock positions as they appear on their site. So you can see exactly how many shares I have, my average price, the market value, and the actual net profit or loss from those positions. Now, as we've just been talking about Hims and Hers Health, you can see now that my £250 is worth £348.45, which is a very nice increase indeed from my initial position. So all 3 of my quantum stocks are in profit, and nice profits as well. They have consolidated a little bit in the last couple of months, which actually is totally fine with me because I want to build the number of shares within the company at the lowest price possible over the next 18 months to potentially 2 years. Now, as well as talking about the positives, let's talk about the negatives. So for full transparency, my United Health stock has not done very well. Initially, I actually was in profit, up £25 to £30. However, there have been some developments within this area. The government is now getting involved, and it could be a little while before we see some improvement in that stock price. However, I'm going to be keeping it certainly for the short term, and then I'll make some decisions in the next 4 or 5 months And potentially, if we are still at a loss around these kind of levels, then I may sell at a loss, because these aren't my most high conviction plays. My high conviction plays are, as you know, the quantum stocks, so I'd rather position that money in there. However, I don't want to sell at a loss if possible, so I will just have to wait and see over the coming months how United Health performs. So I showed this graph in the previous video, so it's nice to have a couple more data points to add to it. Along the x-axis, we've got the months, so that goes up to 50 months, and then we've got the estimated invested or estimated return on the y-axis. Just as a reminder, the mauve line represents the estimated invested, so that's the £500 per calendar month, so that is always going to be a straight line. The orange line represents the actual appreciation in the account, with my 15% annual growth rate that I'm hoping to hit in the portfolio. So now let's zoom in and you can see where I am in terms of the actual invested and the actual return in the portfolio. So the actual invested is now the red line. So the green line is the actual portfolio value, and you can see after a strong start it's come a little bit closer towards that red line. However, the most important thing is that we stay above that red line, and we would love to see that exponentially grow in the coming months and years. Okay, next let's have a look at the final figure for July 2025. So that equates to 7,885.36. So that means that the portfolio capital appreciation has been £885.36. So that's a really nice return, and actually has grown a little bit compared to the previous month. I think around about just over £200. So the great news now is that we are 4 months ahead of where we plan to be in terms of this journey. So that's really nice, and hopefully that will grow in the coming months as well. What I thought I would do now is just to show you the volatility that I have in the portfolio. It's all well and good talking about the start figure and the end figure, but there actually is quite a lot of volatility during the actual month, especially as my portfolio begins to grow in value in terms of the actual value that I'm adding each month, and also the capital accumulation within the portfolio. So you can see in this graph that I had a low of around about 7.8k, and actually I had a high of around about 8.5k, so that's about a £700 difference within 1 month. So with a portfolio of my size, we're looking around about 9-10%, which is quite sizable indeed in terms of the fluctuations. And right at the end of the month, we had quite a big fall, and there are reasons for that. So I'm just going to describe those so that I have those on record. The stock market did plummet in the last week, and that is a combination of disappointing economic data and also renewed trade policy concerns. The US Labour Department reported only 73,000 jobs added in July, well below the target of 100,000. That's also coupled with downward revisions of 258,000 jobs for prior months, pushing the unemployment rate to 4.2%. This week jobs report sparked fears of an economic slowdown, contributing to a 1.6% drop in the S&P 500 on Friday, and that's the worst week since April's tariff-driven sell-off. Additionally, we had President Trump announce new tariffs ranging from 10% to 41% on countries like Chile and Syria, effective from August the 7th, which then obviously reignited worries about trade disruptions. So as well as the economic data and the tariff news as well, we had corporate earnings, which also put downward pressure on the market. So Amazon had an 8.27% share drop after a weak profit outlook, weighing on the tech sector, despite strong results from firms like Meta and Microsoft. So high valuations and potential tariff-driven profit erosion fueled a risk-off sentiment, with the Dow Jones falling 542 points, so that's 1.2% roughly, and the Nasdaq dropping 2.2% on Friday. The VIX, which is the volatility index, surged by 25%, reflecting the heightened investor anxiety. The thing is as well, August historically has low trading volumes, so these kind of things amplify the swings, because I'm guessing that most people are on holiday and are taking a break from investing and trading. And while some anticipate that the Fed will cut interest rates in September to address economic concerns, ongoing uncertainty around tariffs continue to cloud the market sentiment, raising the prospect of further volatility. Now that we know that the actual markets are forward-looking, I think that there will be an interest rate cut, potentially in September, which is the actual next meeting. So we'll have to wait and see. So nothing really changes for me in terms of the volatility. What I'm going to do in August is I'm going to continue to invest. And in fact, I'm going to go further than my £1,000. And with the earnings of my 3 quantum stocks happening this month, I think it's a great opportunity to continue to purchase. So I'm hoping to invest £2,000 in August, and we'll see how I get on with that and see what happens in the markets. That will also run down my cash reserves, which is also my plan for the moment. So finally, let's have a look at the balanced distribution of stocks and shares ISA holders in the UK. So for the last couple of months, we've been in the £5,000 to £10,000 category, and with my closing balance of £7,885, we are still nestled in the mid-range. So I imagine that by the end of September, I'm hoping that we will be in that 10,000 plus category, and the actual portfolio value will be 5 figures. But again, we'll just have to wait and see. So thanks very much for watching. Let's see what August brings and the earnings reports from my 3 quantum stocks. Digger dagger.